Let's dive in together in this video. Today I'm going to teach you, or you are going to learn 5 mistakes that you should avoid while filing this return. The first and very crucial mistake is the nil return. So the more you file nil return, zero, that declaring zero to the Kenya Revenue Authority, is you are dragging yourself into a pitfall of audit, KRA audit. Why am I saying this? If you are sure that you don't have any generated, or you didn't generate any income at all during this period of 1 year, then you are allowed to file nil return. The tax laws allows you to file nil return. But if you have other business, then you don't need to file for the nil return. Instead, the first thing you should do the investigation, or the thing which you should interrogate is your bank statement. You have to interrogate your bank statement and check whether there is any income which has been deposited to your account, but you have declared a nil return. Because one of the source documents that the Kenya Revenue Authority will ask if they come for Kenya for KRA audit is the bank statement. And they will realize that there is a deposit in your bank statement, but on the other side, you have declared that there is a nil return. You didn't accrue any income in this period. So that is the one pitfall that you need to avoid. You need to avoid. So which means don't go to the cyber and take any person to file your return. Get a professional person to file your return, either a tax consultant or accountant. That's one. Number two is, if your PIN, either as an individual or a sole trader PIN, has been attached to the obligation of the VAT. Because this comes a time when most people register for the companies, they register the company and they use the personal PIN for associating with this company. Even when raising the tax, or what do we call the ETIMS invoice, they raise with the personal PIN. And at the end of the month, at the end of the year, while filing the income tax, they only declare maybe if the employment income. So if you declare the employment income and your PIN has been attached to any tax invoice, then that is a challenge. That's a problem, which the KRA can come to they can knock your office. So at this point, at this time of filing the income tax, do analysis of your PIN. Check all the invoices which you raised last year. If there's any invoice which is attached to your PIN, then declare that income in your income tax, so that you don't drag yourself in a pitfall of a crime. Like if you evade filing tax, it is a criminal, or it is a crime activity. You can be jailed. So why don't you check or take your time and go through that one before you file? Which means, again, I remind you that don't go to cyber and file your return. Get a professional person to file your return. That is number two. The 3 mistakes which most people also file or get into while filing the return is withholding taxes. Maybe you have gone to done provide the service activity in company A or company B. You have done this service 1, 2, 3. At the point of payment, the person paying you withhold either 5% if it is a professional fee, or 3% if it is a contractual activity. That 5%, that 3% have been paid to the Kenya Revenue Authority as advance tax for you. And then you end up declaring nil return, or you don't declare that sales completely. So if you don't declare that sales completely, that is a mistake you are making. It is called tax evasion. That one is called tax evasion. So what do you need to do? If you log into your Kenya Revenue Authority iTax portals, go to the certificate section, reprint all your certificate for the previous period. You should be able to see all the certificate which has been submitted to your page. Go one by one, check. This certificate was this certificate has this amount, certain amount of the withholding. In that certificate also you will find the gross amount. So accumulate all the gross amount for all the certificate and declare that one as an income in your returns filing, either in IT form, which is for the individual, or IT2 form for the income tax for the company. So make sure that you declare that one so that you avoid for audit queries, and also you avoid the tax assessment, additional tax assessment. That one is number 3. That one is number 3. Number 4 is failing to file your return at all. So if you fail to file your return at all, you will have 2 consequences, or there's so many consequences, not even 2 consequences. Maybe I can just mention one. One, you will get penalty. If it is for the individual, you will get a penalty of 2,000. If it is for the company, you will get a penalty of 20,000. So that is one. Number 2, consequences of not filing that at all is that you will not, you will have what is called the compliance problem. You will not have the tax compliant, or you cannot be able to retrieve the tax compliant, because if you retrieve the tax compliant, they will redirect you back to file this return, or they will tell you you have not filed this return from this period to this period. So not declaring or not filing your return, it shows that you are not a compliance, and it can lead you in so many consequences. Now, the last thing you need to avoid when it comes to the tax returns filing is checking your final tax due. And this also, again, I will insist that don't go to the cyber to file for your tax. Get a professional tax consultant, accountant, auditor to file your returns, because if you go to cyber cave, they don't understand what it means if the tax due is a positive, or if the tax due is a negative. So if the tax due is a positive, then that is tax payable. You have to pay that tax within that prescribed period, or before that yet of the June of this month. So if you don't pay, what will be the consequences? You will avoid the penalty, yes, but you will not avoid the interest. The interest will accrue on a daily basis. The interest will accrue on a daily basis. Again, if you submit this as a positive figure or a tax payable and you don't pay, your liability will be hanging in the system of the Kenya Revenue Authority as the tax liability. And remember, Kenya Revenue Authority operate as other company. They have the data controller in that department who has been assigned maybe to your PIN or several PIN. They go through the balances or outstanding taxes which have not been paid, and they will probably find your PIN there. So you will be called, you will get an email for additional assessment, and if it need be, they can even come to your office for the inspection. So make sure that when you submit your returns, if it is their payment, make sure that you pay that one to avoid further issues. So that's 5 mistakes which are commonly being avoided by so many taxpayers. So make sure that you comply with these basic guidelines, and you will get yourself compliance, and you will not have all these challenges. So we as a professional consultant, we as a professional accountants, those tasks we normally do. So to wrap up with, if you like our video, comment, share, like, and also keep the challenges in your comment section that you are facing currently with the Kenya Revenue Authority, and we will be able to sort you out. So thank you. Make sure that Be our family by getting engaged. Let's engage. We engage you, you engage us in the comment section, and also through the likes and the comment of the video.